The U.S. Supreme Court gives the go-ahead for the government to sell $4.4 billion in Bitcoin. More than half of millennial investors look to crypto ETFs. And what was the Bitcoin community's reaction to HBO's Satoshi reveal? Stick around to find out on this week's Bitcoin News Update. Hi, I'm Nate Martin with this week's Bitcoin News Update. The U.S. Supreme Court has given the green light for the sale of 69,370 Bitcoin, worth about $4.4 billion, seized from the Silk Road marketplace. Battleborn Investments had appealed, claiming ownership of the Bitcoin, but their case was rejected, solidifying the government's control. The U.S. Marshals Service will handle the sale, which could influence Bitcoin markets. Many believe Coinbase Prime will act as custodian for the assets. With the U.S. elections approaching, some are speculating on the timing of the sale. While a large sale like this might shake up the market, spreading it out over time or selling it over the counter could reduce any major impact. The court's decision allows the government to move forward with liquidating the Bitcoin under current laws. SEC Commissioner Mark Uyeda recently criticized the agency's approach to crypto regulation, calling it, quote, a disaster for the whole industry. Speaking on Fox Business on Wednesday, Uyeda expressed frustration with the SEC's reliance on enforcement without providing clear guidance to crypto companies. He pointed out that this lack of clarity has created uncertainty, forcing courts to step in and deliver inconsistent rulings. Uyeda's remarks followed a lawsuit by Crypto.com accusing the SEC of overstepping its boundaries by treating most crypto tokens as securities. He didn't comment on the case directly, but emphasized the broader need for clear regulatory guidelines. Without clear rules, he said, it's difficult for companies to know how to comply with securities laws. His comments reflect growing frustration within the crypto space, echoing fellow SEC Commissioner Hester Peirce's criticism of the agency for failing to offer clear direction on digital assets. A recent survey by Charles Schwab shows growing interest in cryptocurrency ETFs among U.S. investors. About 45% plan to invest in crypto-based ETFs over the next year, up from 38% the previous year, surpassing interest in bonds and alternative assets. U.S. equities still lead overall, with 55% of participants planning to invest in those. Among millennial ETF investors, though, crypto tops the list, with 62% intending to invest there, compared to 48% who would include U.S. stocks and 47% for bonds. In contrast, only 15% of baby boomers showed interest in digital assets. Eric Balchunas, senior ETF analyst at Bloomberg Intelligence, called the rise in interest for crypto and investment plans pretty stunning. The survey, which polled 2,200 investors aged 25 to 75, suggests a growing boost for crypto-focused ETFs as a diversification tool for traditional portfolios. South Korea's Financial Services Commission announced the formation of a virtual asset committee on Thursday to oversee the approval of spot crypto exchange-traded funds. Led by FSE Vice Chairman So-Young Kim, the committee will provide guidance for the crypto industry and tackle key issues, including corporate account authorization. Currently, crypto ETFs are banned under South Korea's Capital Markets Act due to anti-money laundering concerns. CryptoQuant CEO Ki-Young-ju noted that approving spot Bitcoin ETFs could reduce the kimchi premium, where on average crypto prices in South Korea are higher than global markets due to higher demand. Touching on last week's lead story, HBO's new documentary Money Electric, The Bitcoin Mystery, stirred controversy by suggesting that former Bitcoin developer Peter Todd is Satoshi Nakamoto, the mysterious creator of Bitcoin. The documentary points to a 2010 post on Bitcoin Talk allegedly made from Todd's account and claims he left cryptic messages about destroying access to Satoshi's 1.1 million Bitcoin. However, Todd has strongly denied these accusations, responding to leaks before the documentary's release. He stated, "I'm not Satoshi," calling the documentary's approach conspiracy-driven, similar to the filmmaker's past work on QAnon. The crypto community has also been quick to dismiss these claims. Ex-user PixOnChain debunked the idea that the 2010 post was made by Satoshi, suggesting it was taken out of context. BitMEX Research also called HBO's theory ridiculous, stating there's no evidence to believe that Todd is Satoshi. Many others view the claims with skepticism, even questioning HBO's credibility on the matter. Noted Bitcoin historian Pete Rizzo went so far as to call the movie an insult to Bitcoin, cynical, stupid, and dangerous. Samson Mao, who was featured in the film, posted on X before the show even aired that Peter Todd wasn't a viable candidate to be Satoshi, but that the documentary was worth watching and that filmmaker Cullen Hoback is a Bitcoiner himself and would present Bitcoin in a positive light. I think Matthew Cratter from Bitcoin University put it best by saying, quote, "To this day, no one knows who Satoshi is." And that's a good thing. With Bitcoin being a $1 trillion asset with momentum of its own, it really doesn't matter. We can use the wheel without needing to know the identity of the wheel's inventor. Cratter finishes by saying, quote, "Satoshi wished to remain anonymous, and so we should respect that." And I agree. I'll leave a link in his video here. That's it for this week's Bitcoin News Update. If you've enjoyed this episode, make sure to leave a like, consider subscribing to the channel, and turn on notifications so you don't miss our next video. I'll see you next week.